Questions saw the eventful year of economic current affairs 2024. Unlimited news update and teachers' role focusing on teaching. Then comes the money, banking, finance, and insurance pillar 1A. So, evolution of money. Evolution of money, commodity money, metallic money, full body and token, paper currency, fiat money and legal tender, digital payment, bank money, check, UPI, Bitcoin, cryptocurrency, central bank digital currency, CBDC, check clearance system. So, old system physical movement and new system digital and image based. NEFT RTGS, so money transfer via bank and beneficiary account lockup facility planned by RBI. Then the UPI, so UPI when the exceeding development UPI 123 light beam overdraft UPI coupon delegated payment secondary account for family members tax payment tax income tax this GST excise up to 2 lakhs ATM cash withdrawal scan barcode ATM cash withdrawal for potential UPI use and international payment project Nexus. So cross-border payment for tourist and bank for international settlement BAS and Switzerland and trial mode India and Asia countries. Then comes the card payment system. So card payment system we have payment gateways, visas, Mastercard, co-branding card, bank and payment network and RBI guideline allow bank to tie up with multiple networks. Then the Paytm bank controversy. So allegation of money laundering, KYC issue, and RBI action, restriction bank access, and NPCI requirement tie up with other banks for TAPA license. Cryptocurrency, so the virtual digital currency sovereign CBDC by RBI, private Bitcoin and Dogecoin, and Bitcoin creator Satoshi Nakamoto, and acquired currency by mining, selling goods and service, buying the fiat currency. Mnemonic new variant and meme coin new variant. So not legal tender in India, not accepted as collector for long. Then the monetary policy. So monetary policy inflation control tools. So I increase CRR, increase SLR, increase repo rate, open market operation, RBI sell securities. Then the money supply measurement indicators. So money, so M0, M1, M2, M3, M4. So focus on M0, M3 is money multiplier. M0 reserve money. So currency in circulation, bankers deposit with RBI, other deposit with RBI. And M3 broad money. So we include time deposit and used calculation money multiply M3 by M0. Money multiplier and economic survey 2025 increase in 2026, demonetization decrease during COVID cash withdrawal, and increase since 2022 withdrawal of 2000 notes. And reason of the recent increase is withdrawal of 2000 notes, increased deposit at HDFC merger, improved efficiency, better interest rate on deposit. Then comes the leakage, decreased money multiplier, so increase CRR and cash withdrawal by public. Then comes the MO charge, economic survey observation. So economic survey observation we have increased when CRR increase when RBI net for an asset NFA increases. Then the policy rate we have the repo rate repurchase agreement. So RBI loans to banks short term, collateral government securities outside SLR quota, flight inflation by increasing loan interest rate, and recent decrease February 25 from 6.5 to 6.25. Managerial standing committee. So emergency loan to banks, collateral government securities within the SLR quota rate is 2.5 and 0.25 and above repo rate, calling for monetary policy corridor. Then comes the reserve repo rate. So reverse repo rate, banks deposit surplus fund with RBI. RBI gives governmental security as character. Then the standing deposit facility, SDF. So banks deposit surplus funds with RBI. No collector required rate is 2.5 below repo rate floor or monetary policy corridor, and introduced in 2022. Then the monetary policy committee. So 6 members. So 3 RBI, 3 government appointees, and government appointing have the changed. And communication system. So forward guidelines, calibrated tightening, and RBI podcast to explain policies to public. And limitation of monetary policy. So cannot control monsoon impact on food price, cannot control global supply chain issue vulnerabilities and resilience, and cannot control the fiscal policy action. And loan interest rate formula. So present external benchmark based, previously marginal cost of fund based lending rate, MCLR. Then comes the banking sector issue. So banking sector issue, non-performing asset, NPS. So historical high in 2018, current level around 2%, economic survey claim, and household stress, international organization concern. Twin balance syndrome, insolvency and bankruptcy code, IBC. So the process of loan recovery, insolvency, professional appointed resolution plan or liquidation, time bound process, and economic survey observations are so beneficial for forex hedging, reduce bond credit spread, improve NPA recovery. Then comes the uh, fraud prevention. We have Sachet platform reporting investment scam, mule agreement, mule accounts. So the used for money laundering, used for digital arrest scheme. Then the financial inclusion platform. So the Kisan Rinpati portal, farmer loan application, and Pravaha portal application tracking, and Prism supervisory monitoring. And foreign bank subsidiaries in India allowed with conditions and syndicate loans. So the group of banks provide loan and can be fixed amount and credit line. Then the capital market, we have the market type. So the primary market, in which the first time purchase of security and money goes to company. Then the secondary market. So buying and selling existing securities and provide liquidity to asset, and money goes to seller. Then the money market, short term less than 1 year. So government weighs and mean in advance and overdraft. And then the companies commercial paper and below exchange, and bank, NBFC, call money, mortgage money, and CBL law. Then the long term capital market, long term greater than 1 year. So stock market and bond market. Then comes the bond. What is bond? So the loan instrument, principal amount and interest coupon payment. Then government security, GSAC. So issued by government, risk free. Then the treasury bill, T bills. So short term GSAC less than 1 year and zero coupon issued at discount. And debtor securities. So long term GSAC greater than 1 year and coupon payment. State development loans, SDL. So issued by state government, slightly higher risk than central GSAC. Bond yield. So The return on bond instrument inversely related to bond price. Higher the bond price, lower the bond yield. So green bond fund used to environmentally friendly project potentially for greenium, lower yield, higher price due to positive impact. Economic survey limited greenium and India's green bond and Bhutan green bond funding mindfulness city and initial public offering IPO. So IPO company sell share to public for first time, grey market, corrupt trading, illegal trading before listing. SEBI propose when listed platform will combat grey market. Bond market development in India. So bond market, so economic survey, stock market development and bond market weak. So reason for weak bond market. So the RIDI, so restriction on insurance company investment minimum AA rating and restriction on investment in private sector bond. Then comes the deepening of capital market. So the increased participation of all income group and increase in Indian investor 5 crore to 3 crore, 13 crore, and to 2022 25 24. So market trends. So the COVID impact initial fall and recovery, Ukraine war impact fall, Adani Hindenburg report fall, US Federal Reserve tempering impact fall, recent market fall into October 2024. Then the investor behavior. So the new investor post 2020 have not experienced major bear markets and disposition effect, sales winner early, low hold loser. Then the factor affecting the Indian market. So the correction with US market, one way relationship, yen carry trade. So borrow yen at low interest in Japan, invest in higher yielding asset in India or earthware, arbitrage opportunity, and profitability reduced due to increased Japanese interest rates. Uh, Adani Group use court case, bribery allegation, and Hague Service Convention judicial documentation exchange. Bitcoin exchange traded fund ETF, so instrument tracking Bitcoin price and indirect investment option, RBI cap on outward remittance, LRS liberations remittance scheme for mutual fund investing in such ETF, 1 billion USD per year. Then the future and option market derivatives. So value derived from underlying asset, future agreement to buy sell at future and dates, and option right not obligated buy and sell, and service research high losses for retail investor. Then the alternative investment fund AIM, so private equity venture capital hedge fund limited to high net worth individual and institutional investor. Then comes the insurance and pension pillar. So the insurance sector, we have the regulator IRI, FDI limits. So LIC public sector 20%, other insurance company 100% from 74%, and insurance intermediary 100% previously our. So condition for 100% FDI premium must be instituted in India, and consumer protection reform IRDI. So the 30 days free lookup period, Bima Wahak village level agent and Bima Vistar all in one policy, and Bima Sangam portal online comparison purchase renewal. Then the LIC Bima Shakti Yojana, rural woman agent, and free health insurance, Ayushman Bharat, Jan Arogya Yojana, 5 lakh, and gig worker eligibility for registered on e-sham portal. Then the pension sector. So regulator PFRDA Delhi old pension scheme, OPS defined benefit, and new pension scheme NPS national pension system defined contribution. So The contribution so introduced 2024, so employee contribution 110% and government so 14%, pension linked to market performance. Then the universal pension scheme UPS proposed so addressing shortcomings of NPS and ensuring a minimum pension may be government top up. Then the fiscal policy pillar 2, budget we have annual financial statement presented on February 1st, covers April 1st to March 31st, and only governor budget, railway budget merged, and classification revenue account and capital account, revenue account tax, non tax received, and revenue expenditure, salary, subsidy and interest, and capital account borrowing, investment, capital expenditure and infrastructure, and loan to state and investment. Then comes the this FRBM Act. So enacted 2003, Vajpayee government target fiscal deficit less than 33 less than 3% of GDP, revenue deficit equal to zero. Target extended over time and suspended during COVID-19. Then the deficit, so the fiscal deficit, so total expenditure minus total receipt excluding borrowing, and the latest target 4.4% of GDP, latest number, okay, 4.1%. Revenue deficit, so revenue deficit, revenue exchange minus revenue deficit, so the 1.5% of GDP. Then the effective revenue deficit, so revenue deficit minus grant for capital asset creation, so it is the effective revenue deficit. So latest number, so very low. Then comes the primary deficit, so the fiscal deficit minus interest pay on past loans, so this is also there. Then the fiscal consolidation, fiscal glide path. So reducing fiscal deficit over time and goal to reach FRBM target. Then the budget functions, so provide public good, redistribution of income and stabilize economy. Then government borrowing, so uh, cannot print new currency to finance deficit, inflation risk, and tax multiplier is negative, and Laffer curve tax revenue versus tax rate. Then the ways and means in advance, so temporary loans from RBI to government address temporary mismatch in receipt and expenditure limit set by RBI and government. Then the taxation, so pillar 2, so tax to GDP ratio. Tax to GDP ratio, so normally 10 to 11%, expected 12%, direct tax 7, and indirect 5%. Then the income tax, so old tax regime below deduction, and new tax regime simplified slab and limited deduction. So standard distribution introduced 75,000 simplified tax slab, so up to 12 lakh taxable income, and then slab. Then the capital gain tax, so the tax on profit from selling asset and real estate, indexation benefit and adjusting or inflation, and 2024 budget track in indexation benefit for real estate and virtual digital asset bitcoin 30%. And corporate tax, tax on company profit and lowest in the world around 25%. And global minimum tax, pillar 2 of OECD and G20 framework, so M minimum 15% tax on large multinational profit, and address tax evasion and avoidance and challenge US withdrawal Trump. And new income tax 2025 replacing 1961 Act M, significant reduction word count and table format, and define virtual digital asset versus asset, and controversy asset to social media and chat, and single tax year replacing financial year and assessment year. Okay. Then the plan card 2.0, so pre-registration via email, free PDF, and printed card fee, and include QR code scanner. Then the government scheme pillar. So priority sector lending PSL. Bank must lend 40% of loan to priority sector agriculture MSME. All loans given to priority sector count toward PSL as per UPSC answer key. Thus, the MSME scheme, so internet interest equilibrium scheme for MSME exporters. So, government subsidy 2 to 3% investor for exporting MSME. Then the scheme for first time entrepreneurs, so loans up to 2 crore and focus on women and STC entrepreneurs. Then the PM Vishkarma Yojana support for artisan, Mudra scheme Yojana, Mudra loan and micro loans and credit guarantee scheme and loan guarantee. Then the was PM Swanidhi street vendor scheme. So we have the loan for street vendor, government subsidy interest and credit card with loan limit 50,000. And then the farmers loan, so the collateral free loans up to 2 lakh and increase from 1.6 lakh January to 25. Interest rate 9%, modified interest subvention scheme MACE, and the government subsidy 2% and additional 3% of timely repayment and effective rate 4%, and Kisan credit card application for miss, and interest submission limit the increase to 5 lakh from 3 lakh to 25 budget. So it is for today's. Thank you very much.